I think Nick and I got the last two, didn't we?
We did once we bumped each other out of the way.
Welcome to our guests as well. So, sitting there in the back row. First order of business is to approve the minutes of the 27th of June. Is everybody okay with those minutes?
Thank you, Chairman. There's one apology from Councillor Osborne Patterson.
Thank you, Eddie. I think everybody here has been here before, knows where the fire exits, etc. are, so I won't waste too much time with that. Are there any interest to disclose relating to today's papers? Thank you. The first order of business is agenda item 4, which is the 2012-13 statutory accounts and annual government's report. This is to approve the statement of accounts and the revised statement for publication on the website and in hard copy for those who request it, and to consider the contents of Grant Thornton's report of audit findings. There is one addition, page 15, to those audit findings, which I've been made aware of today. I must say I haven't had a chance to read those yet, but I'm sure Paul or one of his team will gladly explain that to us in a few minutes. And also to approve the letter of representation from the Council to Grant Thornton, who I believe are also in the process of merging with Baker Tilly. No? That's you, sorry. There's so many mergers and things going on, I apologise for that. You're next week. So, the summary, there's a summary here. Are you going to go through the summary, Paul, or do you want me to just summarise the... well, the accounts first. And, well, the accounts and your report, yeah, some of your findings. Sorry, on the accounts. Presumably.
Thank you.
Thanks.
Yep, the report that you have in front of you, this summarises the findings of the work we've done across the year for the whole of the 12-13 audit. I'll just touch on the additional sheet of paper that was in front of you. The only extra bit on it is row 3, and in the last few days the officers identified further 2 misclassifications which for their perfectionist natures they would also like reflected in the accounts, but it also means that we also just need to reflect it in our report as well, so that's the reason for the addendum. As a whole, the key message really is that for both the accounts and the arrangements that the Council has in place to secure value for money, we're proposing to issue unqualified opinions in both cases, which is exactly where you want to be as an organisation. I think in terms of the accounts themselves as a document and in terms of the quality of them, they were very, very good. And I say that not just in comparison to some of the challenges that the Council faced a couple of years ago and the significant significance of the change that there's been in terms of the quality, but also as a set of accounts against any other council, they also stand up very, very well, both in terms of the quality of what was presented and how few changes there have been from the draft version to the final version. I think it's very encouraging to see, and I commend the officers for clearly the hard work they put into it and the quality of the finished product which they were able to submit to us back in the summer. In terms of some of the key aspects of the report, there's a small number of amendments that have been made. These are set out in slightly more detail on page 14. They one of which relates to what was just double counting. An element of double counting had crept in to one of the valuations, and the second was an imbalance between figures that flow through from the income and expenditure account and the balance sheet. They are both not material misstatements, and to have only two misstatements of that nature, which aren't disclosure aims, is actually a very good position to be in. Over the page, on page 15, we then have what we call the misclassification and disclosure changes. These are not necessarily errors, but just amendments that were needed in some of the disclosure notes to the accounts. This is the page which is replaced by the addendum, and as you can see, it's the addition of a third row, which is the key aspect. And again, only for a disclosure change, or two disclosure changes totaling no more than 140,000. The audit plan that we submitted earlier in the year set out the risks that we were going to focus on earlier in the year. This document then sets out those same risks that we'd identified earlier in the year and the findings that we have against those risks. Starting from page 9, in every audit there were always what we call fraud risks, and there were always two of them. And they are, in a nutshell, the risk that management has improperly recognised revenue in order to arrive at a predetermined financial position, and the risk that management has overridden the controls in place within the organisation, again to arrive at a predetermined position. The work that we've done in those areas, as expected, there is no evidence of any activity of that sort going on in terms of the statements that have been produced. The following page presents the other risks that we highlighted earlier in the year, and again, other than the items I'm then going to come on to talk about, in terms of the risks themselves, the work that we did was sufficient to enable us to conclude that those risks weren't present in the financial statements that were then produced. We also report to you share some of our thoughts in terms of the accounting policies and estimates, and also in terms of any internal control issues that come to our attention. In terms of the accounting policies, some large judgments are present in most accounts with a large asset base in terms of the valuations of those assets. This year, the values of some significant assets changed considerably. Clearly, there are large judgments involved there, both in terms of the judgments exercised by the valuers, the considerations of those judgments by the officers of the council, and then our considerations of those considerations. We present to you the picture that happened so that you're also aware of those key judgments that took place in the compilation and the auditing of the accounts. The end result is, whilst there are some very large movements and the corporate memory doesn't go back fully to understand the start position to therefore fully understand the movement, the end point that we're at for this year, we've got assurance over the valuations that were done and the assumptions that were used in making those valuations, that we don't think there's any material misstatement present in the valuations of those assets. The second accounting policy area, again, this isn't material, and it relates to the fact that this year officers chose to make a prior period adjustment to last year's set of accounts. The accounting policy you have says you would only do that if it were material, and otherwise you'd make an in-year correction. The approach taken is a departure from the accounting policy you have in place, but it's not a material departure. Again, we required to share that with you. It's not anything that gives us any particular problem in terms of signing the accounts, and certainly doesn't impact on the opinion. In terms of the internal controls issues that we identified, they start on, or the pages 17 and 18 contain these, but the most significant one for us was the journal controls. We've reported in previous years some of the concerns we had over the journal authorisation process. There's always been a balance in a relatively small organisation between the robustness of the controls that you have in place, which in themselves can be costly, and the benefit to be gained from having them. This year we identified that a large number of journals had been posted at riskier times, which doesn't mean that they in themselves they're wrong, it just increases the risk over the environment, and that's largely they're posted out of hours or from remote locations. Combined with the fact that the system as it was didn't impose a management check of those journals, it just increased the risk. And this year the risk was such that it gave us a lot of journals to test. To keep the audit efficient, we worked with internal audit. Internal audit then performed a detailed check of all of the journals which you'd identified as risky. They find that they're absolutely fine. No issues were identified in terms of the values of the journals processed or the reasons for processing them. And we were able to rely on internal audit's work to get assurance that the journals that had been processed were all okay. It hadn't resulted in any evidence of a material misstatement from there. But our concern remained over the risk surrounding it because of the controls not in place in terms of authorisation. Since then, the strategic director has put in controls in place and changed the rules over that so that independent authorisation is now required. Our residual recommendations are to consider, again, bearing in mind whether there's a cost-benefit analysis to be done, but whether or not the system could be reconfigured to enforce the authorisation control rather than relying on individuals to seek it themselves, and also to consider whether there are any controls that can be done on the system to prohibit posting of one-sided journals and other factors that could lead to material misstatement, but as I said, this year haven't. The next we badged it as internal control just because that's what the template calls it, but it's almost a risk we just share with you that a significant contributing factor to the increased robust quality of the accounts has been the work that Jeanette has done over the years. With her departure potentially nearing, it's key that the knowledge and the experience in Jeanette's head is handed over to the corporation, the organisation, so that it's not lost on Jeanette's departure. And there are arrangements in place, again, that I know the strategic director is looking to ensure take place.
I just asked the strategic director to just comment on that. Is that what you want?
Thank you, Chairman. There's probably a couple of issues there worth reporting on, actually, responding to. The first is the journals issue. Yes, it is an ongoing debate that Paul and I have been having for 2 or 3 years now. The reason why we haven't put tighter controls on is fundamentally because we have a policy of flexible working and encouraging people to work at home, and our view per se is that it's not a bad thing for staff to be working, inputting journals either over the weekend, at night, as long as you have got a robust control over them. Now, as Paul has said, our system is actually fairly old, our financial system, and it would be quite costly to put those controls in the system itself. So we have relied on manual systems which rely on people fundamentally. And in a small team, and it is a small team, it has proven very difficult to exercise absolutely rigid authorisation of every journal before it gets input, or even sometimes sort of retrospective checking on a Monday morning if journals have gone in over the weekend. So sort of reluctantly, and it was reluctantly, I've agreed with Paul's advice, and we have implemented some new controls which frankly ensure that all journals will be processed during office hours in the office where there are other staff around who can authorise journals before they go in. I say once because I think we're going to have to do it at some point before too long. Once we have either enhanced our current financial system or replaced it with a new system, then actually hopefully those controls will be in the system such that we can revert to enabling staff to work when they wish to. But at the moment, I think it is right that we've accepted the response we've had. Just briefly to, at the risk of embarrassing her hugely, just refer to Jeanette. I would love to sit here and take all the credit for what I think what Paul has said has been a really quite astounding turnaround from where we were a couple of years ago. I can't do that, and nor am I going to. A huge part of the credit for that is absolutely down to Jeanette, who has done a tremendous job, not on her own, with the team. The accountancy team, full stop, have done a great job, but it's very much with her skill and knowledge and leadership.
Thank you for that.
Very welcome. The good news, because her current placement with us ends on Monday. I don't know whether the guys behind know this, but we have actually just agreed with Jeanette that she will be returning to us next March to support the closure of accounts and audit process. That gives me massive reassurance and confidence for the future, and from the nods taking place in my colleagues behind us, I think they share that view. So thank you, Jeanette. That's all I wanted to say at that point. Thank you, Chairman.
Yeah, thank you for that, and thank you from me, Jeanette, and all to the rest of the team as well for all the excellent work that's gone in this year.
Thank you,
Paul,
Chairman.
I'll let you continue on. I just felt we were going through quite a lot of stuff, and some of it would be more effectively sort of answered sort of during the process, if that's okay, if there's anything else. Thanks.
Thank you very much. And I think with that news, you can, if you had a felt tip pen, you could colour that amber into green. It's in terms of the accounts, the only other issue of note really was in terms of certain officers in the estates and IT functions being able to self-authorise their own purchase requisitions. I understand the reason it's there is in terms of emergencies. Anecdotal checking there suggests it was possibly happening in more than just in emergency cases, and it was consideration. We suggest looking at that, whether there is a need to tighten that or not. Again, it's nothing has arisen from that that's led us to believe there's any particular irregularity that's taken place as a result of that. So in terms of the financial statements, as I said at the beginning, that it's been a tremendous journey from where you were two years ago to now, to not being able, not just that you can hold your head up high in terms of where you've come from, but also you can hold your head up high against other councils, really, in terms of the quality of the accounts there and the very small nature of the number of amendments that have resulted. The other part of the work that we do is on the value for money conclusion, as I said, proposing to be unqualified. The report sets out over the next following few pages some of the considerations that we've been through in terms of arriving at that conclusion and sharing some of the work that we do this year and most years in terms of updating knowledge of your position. In summary, you continue to demonstrate a strong track record of meeting your financial targets, of making the savings that you plan to make. In the 12-13 year of audit, again, financial targets were met. You were able to make increased contributions to reserves, which further strengthen the financial resilience that you've got. And you've set a budget for you're in 13-14, a balanced budget with, again, only a minimal planned use of reserves, which may or may not be needed by the year end. Continual high collection rates for both council tax and NNDR, which couldn't really get much better than they are. And you're looking continuously at developing other sources of income, taking a prudent approach and not banking that until it's definitely going to happen, but still exploring those areas, which again will further your self-sufficiency and reduce the dependence you have on the whims of government and changes that may happen from national policy, which then has an impact on you locally. Medium-term financial plan, we looked at the assumptions behind the draft plan, and as far as we're concerned, they appear soundly based, they're reasonable, they're prudent, good budgetary monitoring and reporting arrangements in place, and overall, having given the system this year a good kicking of the tyres, we remain of the view that you have very strong arrangements in place. We have no real cause for concern over the arrangements, and you appear well placed to meet the financial challenges which will still come, whether by welfare reform or future spending reviews. The proposal to issue an unqualified opinion is based against minimum standards, but in my view, many of your standards are well above minimum in terms of what you have in place. We've made recommendations in the appendix. Management has agreed and responded to those recommendations, and I'm happy to take any questions you may have on the reports, as it is, or the wider work that we've done during the year. I think I'll just finally finish by saying a big thank you to Phil, Nick and Jeanette. The relationship we have is very constructive and very positive, and enables us to get to issues very quickly and gets to an end result in a very efficient way, and I think I'd like to just thank them for the nature of the relationship and how enjoyable it is to work with them on the accounts.
Thank you, Paul. Are there any questions relating to that report?
Thank you, Chairman. It may be a little... my question might be a little off the track of the work that is done, but it relates to the budget setting process and the opinion that you give in relation to value, that is given in relation to value for money. Talk about the budget setting process and the soundness of the assumptions, all of which I totally accept. But what, and again, this is where I qualify saying it may not be part of your remit. Do you, when you're taking this into account, do you track at all what the corporate priorities of the council are? And would you look to see whether the budget is in any way developed in line with corporate priorities, perhaps in that way?
We certainly take it into account. It's the work that we would do on this wouldn't be a sort of granular, rigorous and robust line-by-line item check in terms of what's in there. It's more the arrangements that you've got in how you arrived at that position. But in arriving at your position, we look at the assumptions that you have and whether they are aligned with corporate priorities. We wouldn't, as such, be given a sort of positive assurance, yes, it is, but equally, if we identified areas where actually it appeared to be in conflict or contradictory to what you were trying to achieve, we would report that. In the work that we've done, we haven't identified anything like that.
Thank you. That's very reassuring.
David.
Yes, thank you. First of all, I'd like to, and I'm sure all the committee members would like to congratulate the team on, getting a very clear audit, and I think that's excellent, particularly given the problems we had in recent years. So I think I'd like to place that on record at the outset, because that's really, really satisfying. A couple of questions I've got, which at least one of them is probably more aimed at Nick than at Paul. About materiality, value a refresher on what the materiality limits are, and I think, obviously 630,000 in the terms of our revenue account would, in my view, be very material, but in terms of the assets isn't. But I'd like to understand that. And also, you mentioned about whether items were treated in the prior year's accounts or in the current year's accounts for adjustments. And you're probably aware that there's a highly topical issue which revolves around whether there might be legal costs that are allocated for activities that took place in prior years. And I'd like to know, if there's something that is of very high political interest with a small p, whether that would mean that it would have to be displayed in the current year's audit accounts, or whether it might get maybe given less visibility in prior year's accounts. So that's sort of one thing about materiality, and then I'll come back to one other question later on, probably when we explored that one.
Who fancies answering that one?
Happy to take a first stab at that. Materiality, in terms of its definition, it is essentially, it boils down to, from an auditor's perspective, the level below which an error in the statements wouldn't change a reader's opinion of the picture that's being presented to them. So although 630,000 misstatement, when we say it's not material, we're not saying therefore you need to ignore it, otherwise we wouldn't be reporting it. What we are saying is that even if an error of that nature isn't corrected, it wouldn't cause a reader of the accounts or somebody who's looking to make a decision on the basis of the accounts to make a different decision from the one they would otherwise make as it is. So it's very much geared towards the reader rather than any internal control or any internal views as to what you want to do with those items of money.
Clarify that. So does that mean that if it had been in a revenue item rather than in an asset value, that one might have taken a different view? Because certainly I would have thought if it had been in the revenue line, I certainly would have read the accounts differently. So I just wanted to get some comfort on that. Right.
That does bear an impact. The approach that we take for materiality, we do base it as a percentage of revenue. Clearly, with asset values, when they're estimates, there's that added fact that an estimate of a value is even more uncertain than the factual accuracy of an income and expenditure item. But in this particular case, had it been in revenue, depending on the nature of the error, if it was an error that was cash related, and ultimately you came back to a cash discrepancy, we may take we may follow it further before we declare it as not material than we would that something, in this case, based on an asset, or which could be based, for example, in revenue, but just be a misclassification rather than an error in the number itself.
Thank you, James. I suggest I'll have a go at the political profile part of the question. And very simplistically, the profile of an issue, political or otherwise, frankly doesn't affect how it's going to get treated in accounting terms. The very simple principle is if goods or services are received in a particular time period, in this instance a year, that is when they will be accounted for. And it's fundamentally as simple as that. There are then obviously going to be questions about precisely which year to which a good or a service did relate. And I think I have to stop there. Obviously, we can't talk about the specific issue that I'm sure I know you're relating to, but we can outside the meeting if you would like to.
Okay, I might take you up on that later on. And I'm delighted to hear that Jeanette's going to be working on the accounts closure next year. That sounds to me to be a great solution. But I would like to know whether there is enough funds available to your department to ensure that we're not dependent on knowledge that's in people's brains to an undue extent, because obviously Jeanette's built up a tremendous amount of knowledge and experience of doing that this year, but we may not be in the position of being able to call on her services in future years. And it does seem to me it's something that, given the progress we've made over the last year, which absolutely we recognise, we don't want to lose that knowledge. So I just want to make sure that there aren't constraints that are preventing us from capturing that knowledge.
Yeah, when we were talking about Jeanette potentially coming back next year, obviously we've spent a bit of time looking at the finance budget in those terms, and there's a couple of things that have been going on in finance in terms of turnover and vacancies, and but also some changes that we've made that give us a bit more room to manoeuvre, and particularly in the procurement area where we're looking at possibility of sharing a procurement post with another district in the future, and in insurance where we've taken advantage of a provision of our insurance management by the county rather than continuing to employ a part-time post in finance. So we've made a number of changes to enable us to do that.
Can I maybe more specific in what I'm trying to get at? I guess what I'm trying to say is, in very simple terms, will Jeanette have the time to make sure that what's in her head is documented so that whoever picks it up eventually is able to learn from all of her learning process? Because I know it can be difficult when budgets are stretched. It's easy for those sorts of things that are, investments, because, let's be frank, when we got it wrong, it cost us a lot of money. And I would rather make sure we've got the documentation so that we're not dependent on knowledge in anyone's head. It's obviously better if you've got the person who's got the experience as well, but I think we do need to make sure we've got the time to get that knowledge captured for future use.
I misinterpreted the question.
That's right.
When I signed a leaving card a couple of days ago for somebody who's no longer leaving, and I said it's been a pleasure and an education to work with you. So, yeah, we recognise that Jeanette has got a lot of information that we need to share around the group. And what we did this year was try to schedule in some sessions where the difficult areas of the accounts were sort of shared around the team. Brilliant that she's coming back for it's a second year for me, it's a third or fourth year for you, but we will take every opportunity to share that knowledge around and make sure that we're all in a position to be able to pick up the various threads.
Thank you.
Are there any other questions? Stella?
Can I just ask a question about the valuations on the property? In terms of that, you said that you received assurances in terms and that you were happy with that in the end. Can you describe what an ideal scenario would be so that we don't end up in the same position going forward? Thank you.
Essentially, what we were looking for, when we've got large differences in value from one year to another in the valuation of an asset, what we'd be looking for is an understanding of what's changed to result in that new valuation, because of the way that, and in here the time frame we're talking about are assets that were last revalued 3 to 4 years ago and are now being revalued. The corporate memory of what the assumptions were in the previous valuations isn't there. So we and officers weren't able to say, well, here's what it was and here's the reason for the change. They were only able to say, well, here's what it is now. And given that the asset valuations 3 to 4 years ago had been audited and signed off as being okay, then it wasn't quite clear what was causing the valuation jump in the absence of some of the normal expectations, such in terms of discounting the normal market valuation changes that had been there year on year. So going forward, we now know what the assumptions are in the current valuations. As long as that corporate memory is retained for the next valuation, we wouldn't be in that position again.
Can I just ask a question which really follows from Councillor Priddy's point, and say that it's referred to corporate memory that actually this is actually recorded on paper, so that both sides actually have proper documents of that. I know we exist in a paperless world now, but we do actually need some proper records that people can go back to.
Thank you, Chairman. Absolutely right. Paul's being very nice and putting his answer in code slightly. To really nail it down to nuts and bolts, what we're talking about here is a particular individual who was an extremely good estate surveyor who worked for us up until about 4 years ago. But he was not the most organised person in the world, which quite simply means there are some of his valuations that we do not have paper copies of, we don't have electronic copies of. And you're absolutely right, we have got electronic copies of these valuations, we have got paper copies of them, we have them indexed, filed. We also have a new asset management system on which they will be recorded. I'm confident this is not a problem we're going to see in the future.
Thank you.
Thank you. Any other questions? Lynn?
I just wanted to pick up on the, I think the staffing issues really. In that Jeanette's obviously done a fantastic job, and thank you, but I'm sitting here listening and I'm thinking it's all based around people, the 3 individuals here, and how do we make sure that next year we're talking about having a wonderful system that's not based on individuals? And I don't see any plan in here that takes it away from individuals, and that's what would worry me. And bearing in mind we are talking about an accounting system, it should be process driven rather than people driven. I don't know how we're going to address that. We can't keep asking Jeanette back if she doesn't want to come, sort of thing. Would we try to?
Thank you, Chairman. I'm sure she'll want to come forever, actually. I can't imagine why she'd wish to work for anybody else. But putting that... Yeah, absolutely. I mean, to a degree, yes, of course, it should be process-driven, but then in the real world, those processes, particularly around accountancy, I guess other things as well, change constantly. And I think there's a fairly major change of some accountancy practices and rules and regulations anticipated next year. And so some of that knowledge, some of that skill is inevitably going to be in people's heads, and they need to train further to develop that. Part of the issue is around the fact we are a very small team. We have a very small number of sit for qualified accountants. In fact, I think they're probably all in this room at the moment. And to be honest, the knowledge that's necessary to really effectively produce this kind of an outcome is in one person at the moment. One vacancy in the team at the moment, which has become vacant in the last couple of months, is actually the Deputy Financial Services Manager, Phil's deputy. And we will be looking at how to fill that post over the next month or so, and particularly what we want to make sure is that whoever fills that post in the future is a very strong, hands-on, technical, qualified accountant. And I think we've already had a question about the long term. What we hope in the long term, having said that, I hope Jeanette's with us forever, is that having appointed such a person for next year, we can use next year's closure process and accounts process to make sure that the knowledge that is with Jeanette has absolutely transferred to whoever is in that post, such that, if necessary, we actually might find that we can survive without Jeanette's support, hard though it is to envisage at the moment. Thank you.
Thanks, Nick. Where are we now? Were there any other questions that come to light as a result of the questions we just had? David?
I just ask one more, which is kind of a suggestion and kind of a question, kind of a comment, which sort of builds on the various comments we've had. One of my, when I used to send people book lists of books to read, there was one of my favourites called Slack, which I'm more than happy to give you details of. But the essence of it was that if you're in an organisation which needs to handle change, you can't afford to slim your organisation down so tightly that you're running at maximum efficiency. And given the comments we've had about, you know, the fact that we are facing change and that there's a lot of knowledge in people's heads, I'm wondering whether we may be close to the point where we've taken that slack out of the system, which is great in terms of us running operating as efficiently as possible, but limits our capability to handle change, particularly when it's thrust on us from the outside. So I just leave that as a kind of comment for people, and if anyone wants to follow up on that, I'm more than happy to do that. But it's just an observation, really, in terms of how we're facing at the moment.
Nick, did you want to comment?
Thank you, if I could, Chairman. I'd certainly welcome seeing the book. We're always interested in that sort of thing. I have to say, I don't think we are in that place at the moment. Just to very quickly recap very briefly, part of most of the issues we had, or a number of them, were around, this is 2 or 3 years ago, a very major change in accountancy practices at the same time as we had maternity leave, a couple of departures from the team, so we did have knowledge leaving just at the wrong time. I don't believe that is the place we're in now. We've got the resources in place to manage the process. Currently, we've got a plan in place to make sure that knowledge and resources there going forward. I absolutely understand the principle that Councillor Preedy is referring to. It is a risk for us. We are a small team. Of course, we do share a lot of knowledge and resources across many authorities in Surrey now, so I think that reduces the risk as well. I'm confident we're not going to see the same problems anytime soon, and hopefully never.
Good.
Thank you, everyone. Has everybody asked everything they need to ask? Sorry, yes, ma'am.
Sorry, just having a look at item number 2, I think this is probably for Nick actually, where we were implementing a system solution to require the manual journals to be independently authorised before posting. The comment we've got here for the management response is, as we've agreed to that comment, but subject to affordability and discussions with the system provider. Could you just add some detail to that for me, please?
Yes, of course. Thank you, Chairman. I mean, frankly, one could solve the journal problem, I wouldn't say quite overnight, but if we were prepared to throw enough money at the provider of our financial system, yes, we could get the absolute system controls built in so that certain things weren't possible. And I have to say the one that exercises me most is the ability to put in a one-sided journal in our system. We've been racking our brains and saying, should that ever be possible? And actually the answer we've come up with is no. So it's something that I would love to get put in the financial system. If when we speak to the provider of that system, it's going to cost us a couple of £1,000, it's probably worth doing. If, on the other hand, it's going to cost us something like £50,000, we have to ask ourselves the question whether it is worth that investment or whether we rely on a manual control which simply says to staff, thou shalt not do this, and then we police that in some way. So that's what that comment means. Yet to make that decision. Yeah. Thank you.
Just following on from that, are we reviewing systems at this stage, or are we looking at a cost-benefit analysis on sort of change we need to make to the existing? I know we were looking at it quite heavily.
Thank you, Chairman. I mean, in terms of financial systems, We haven't considered it for quite a while because, frankly, broadly, our system, although it is a bit old and it's a bit clunky, it fundamentally does what we need it to do. And if you're going to put in a whole suite of new financial systems, we're probably talking £500,000, £750,000, something like that. And clearly, the budget is under immense pressure, and that means pressure for on service budgets. So it isn't something that we've really actively thought about for a number of years now. I think the time is coming. What do I mean by the time is coming? Maybe over the next 2 to 3 years, when we will need to think about significant parts of our systems and whether they are still fit for purpose, whether we can actually drive some significant efficiencies by upgrading those systems. That they are the sorts of conversations that are just starting to be had now, and I think they will come to fruition within a couple of years. Thank you.
Good, thank you for that, and it's good to know that you're on the case with that. Unless there are any questions that have come up against.
Sorry, just a quick question.
Yes,
so you talked about age. How old is the system?
I was going to say not quite as old as I am, no. I think it's probably about 10 years old, yeah, which actually for a ledger system is quite old.
Any other questions? Thanks very much. Okay, so the order of business on this item is for the committee to approve the 2013 Statement of Accounts and revised annual governance statement for publication on the Council's website and by hard copy on request in Appendix A. Consider the contents of the audit findings, which we've done, and to approve the letter of representation from the Council to Grant Thornton in Appendix C. Are we happy to approve that? Agree, yeah. Moving on to the internal audit progress report for September 2013. This is to consider progress on the 2013-14 financial year and the work on the programme approved by the Audit Committee in March. I just wanted to, before we move into that, Paul, are you staying for this, or you're heading off? I'd just like to sort of thank you and your team for all the hard work that's been put in, and for the the recommendations you've made, and very pleased with the way it's gone. And I think Nick Gray would like to comment as well.
If I could, thank you, Chairman. I know we risk indulging in serious backslapping here, but to take that risk, could I just thank Paul, Jamie, Terence and their team. Paul, I mean, clearly a high-quality piece of work has been done. I'm glad that they felt that what we presented them to audit was of a high quality as well. But I think it is important, actually, that the way in which the work has been undertaken, the relationship we have between the Council and Grant Thornton, I think, is tremendous. I think it very much adds to our understanding and has massively helped us get to where we are. So I'd very much like to echo the thanks that you've given, Chairman, to Paul and his team. Thank you.
Thanks very much. Sorry to retract that there, but that was necessary. Back to internal audit, and this is agenda item 5. I'll get it right this time. It's David, isn't it? David Taylor is going to run through this for us on behalf of RSM 10 or whatever name they come up with in the future.
Thank you very much, Chairman. Just to update the committee, first of all, as has been mentioned, we have been acquired by Baker Tilly. That went through on the 2nd of September. So basically we will be changing our name to Baker Tilly from the 1st of October. Essentially, that doesn't mean any changes in terms of the service you receive or the team that's doing the work. Baker Tilly had a very small internal audit division. We employ about 250 staff who specialise in internal audit. So there's very good synergies between the two organisations and the two organisations coming together. So our intention is to continue delivering the service to the same standard and hopefully further enhance the service with the merger moving forward. So just wanted to mention that. That will be happening, and there will be a rebranding of the reports at future meetings. But I'm happy to take any comments or any questions if members have any comments regarding that.
Any questions on those points? Fairly standard sort of mergers, acquisitions, etc., isn't it? And you're going to sort of go into some of the detail of the report.
The progress report, which is before you, that there haven't been any reports finalised since the last meeting. As you can see, there are 4 reports which have been issued in draft, and those are with management for awaiting management responses. The one report which has been finalised since the papers went out is the journal testing one, which was referred to earlier, where we undertook some testing to support the external audit process. We had a very quick and short turnaround in relation to that, but essentially it was looking at a very large sample of journals to really ensure that there were no problems and no issues, and there were just very minor things that have been picked up, but nothing to concern the committee. And obviously that final report will come back to this committee at the next meeting. And the other reports are just awaiting management responses. I think in the covering note there is a comment really about ensuring that reports are responded to quickly so that they can come through to this committee on a timely basis. So it is important that that does happen moving forward. One of the things I discussed with Phil before the meeting was perhaps collecting draft management comments at our exit meeting debrief at the end of the audit, so that will help management to respond to the recommendations, because they already will have in a draft way at the debrief meeting. So hopefully there's ways in which we can tighten that up, but I think it is important that reports are responded to. Just looking at the one dated 18th of July in particular. So I wasn't going to go through the findings of those reports, because obviously we're waiting for those management comments. In terms of the rest of the report, we've made reference on page 2 to the journal testing work, which was some additional work that was requested. And we've also circulated a number of briefings as well, which have come through to management over that period. So it's a fairly short report, Chairman, but happy to take any comments or any observations.
Thanks, David. I understand that a lot of this work is going to be going to the next internal monitoring report, so as and when you've received the responses necessary to continue that work. Are there any questions from anybody on this aspect of the internal audit? David?
Yes, thank you, Chairman. Just a question about the tenancy and welfare reform piece of work, which we've got a start date of 9th of July. I mean, this is a fairly topical issue, and I wonder why it seems to be taking longer than the other ones, and if there's any reason why that's taking longer than the other ones to get started, and when we might be expecting some report on that.
Certainly, I think that review is due to start in July, but we'd certainly expect that to be completed fairly quickly. We've also undertaken some survey work, around welfare reform as well, so perhaps we'll have the opportunity to build some of those findings into that report as well. But yes, it is very much a very topical issue at the moment, indeed, and I think it's referred to within Grant Thornton's report as well. But I'd certainly expect that to come back to the next committee meeting.
Anybody else? No? Okay. Looks like, well, I mean, as you say, a brief report, and thank you very much for the work you've been doing, and we look forward to seeing those reports at the next committee. Thanks, David. Thanks. So the recommendations are that the Audit Committee notes the progress against the 2013-14 annual internal audit plan and makes appropriate observations, which we've done, to the Executive. Don't know if obviously these things will be going forward, so those recommendations can go forward to the next Executive meeting. Everybody agreed on that? Thanks. The last item of business that I'm aware of is the Treasury Management Annual Report and Prudential Indicators 2012-13, which is a report that reviews the performance of the prudential indicators and Treasury Management Strategy and Annual Plan 2012-13 as agreed in February 2012, and Phil's going to run through that for us. That's the report that's in Appendix. It's in the agenda item 6.
Item 6. This is a report that Graham Whiting has produced for us, who's our Treasury Management Accountant that is on holiday at the moment. It's a routine report that we're required to bring to you by the provisions in the Local Government Act 2003, and it's reflecting the requirements of the Treasury Management Code and the Prudential Capital Code that we do this. There are two aspects to the report. One is the report on the returns on last year's investments, so there's some reference in there to the returns that were made on our investments during 12-13. The other part of the report is to what extent have we complied with the prudential indicators, and you'll remember that we went through in previous reports the suite of prudential indicators that we're required to abide by. A lot of them are geared up to councils with debt, so a lot of them are about the level of borrowing that councils are embarking on, so in which case they don't apply in Mole Valley's case, which is debt-free. So the report, I think in the annex, Appendix A is the sort of summary of our measurement against prudential indicators and compliance with those indicators. No issues to raise there, other than that that the measurements show compliance, apart from these the various indicators to do with borrowing. And the other aspect, the return on investments, as I said in the report, the return was something like just above 1% on an average balance of 32 million, which sort of reflects current economic conditions, and Graham does explain in the report a little bit about the sort of flatlining of the bank rate at 0.5%, and the sort of impact on our investment returns of the government's I can't remember the name of it now. The government's initiative to encourage borrowing. The funding for lending scheme is the phrase I was after on page 57. Reflecting the general economic conditions, we were anticipating a return of around 1%. I think the report says that we just improved on it, but that was the situation for 12-13.
Thank you, Phil. Are there any questions on that report? Lynn?
Just one. Because the government's now looking at keeping interest rates low for the next 2 to 3 years, and yet the yield curve is quite positive, but are we looking at more longer-term investments? Bearing in mind we'll get a better return.
Yeah, these statistics are to do with last year, 12-13. What we did in around about this time last year was to come to you with some changes to our treasury management strategy, which we hope will enable us to get a better return, and part of that was to enable us to invest longer term and also increase the amounts that we could place with particular counterparties and so on. So this is a situation before those changes that we've made, and what we'd anticipate is a better report on the current year as a result of those changes.
David?
Yes, thank you. Kind of following up from that, I think it would be interesting. I realise this is a retrospective report, but I think it would be interesting to, following the changes that were made last year, because there were changes of that nature, but also about, I think we downgraded the rating of counterparties we could deal with, if I remember rightly. And certainly I would be interested at some stage to find out what's happened and what we had to do in terms of the counterparties and how much we've had to place with counterparties of a lower rating than we previously had, because obviously we did that because our counterparties kept on merging with one another, I think, and they were running out of companies we could actually place money with. But it'll be interesting when we get to looking at the current year to get a report on that and how we've progressed on that and whether we've had to use that increased flexibility that we gave last year. So I think it's particularly related to these figures, but I think when we look at it again, it'll be useful to know how we got on that.
I think a lot of that was because the datum was sort of changing, really, in the marketplace as much as anything. There was a bit, the government and the investment strategy, in the country as a whole was coming down, so we had to adapt to sort of fit in with what's actually happening out there in the wide world. So I don't know if anybody else wants to comment on that. But
I was just going to update the committee. What we set as our target in that change strategy was we were hoping to earn something like 5% return on 8 million of our balances. So we sort of identified 8 million that we'd try to do something different with and improve the return on. And what we've just embarked on is an investment with a property fund called CCLA, which stands for Churches, Local Authorities. Churches, Local Authorities. And we've only just invested the money halfway through the year, so we don't know what the return for the second half year is going to be like. But they, at the same time as we've invested, they've reported a return on the first half year of something in the region of 6.2%. So we're hoping if they can maintain a performance like that, we'll see an improvement in the returns at the end of this year.
Any other questions at all? Right, thank you very much, Phil, and thank you, Nick, and the team for bringing in, a very positive side to this element this year. Just gone, the year we're looking at, obviously, and let's hope that continues. Is there any urgent business? As far as I'm aware, there's no other urgent business, so thank you for attending. Those that want to go out campaigning, I've no doubt will go out campaigning, and we'll close the meeting at 8:15. So thank you very much. I think that's the second time we've managed to come in on the hour. So